Here we go. And I'm going to start, as you know, normally I start with some of the political stuff. Now, remember, this isn't individual financial advice because I'm not speaking to you individually. I'm speaking to you collectively, and it's for educational purposes only. I'm just going to show you how we've been doing on some of the models we've created. Now, models are very much created for individuals based on their own particular, and I'll share this with you in a second, particular drawdowns and requirements. And before I get into this, one of the things I want to go into is where we see the world at the moment. Okay, so were I to show you what's going on at the moment, Intel, more investment from Apple. Whilst the president has acquired a stake for the US government in Intel and doing all these deals, we tend not to chase narratives and stories. That's not to say Intel might not be a good punt or speculation and whatever, but I just wanted to set some context on how we do things. We tend not to look for those narratives and stories, tempting though they are. Now, if you wanted to set up a separate bucket for that, that's perfectly fine. Okay, so what I thought I'd do today is just go through some of these things. Argentina, yet another rescue package needed. That's not going to impact the stock market, right? Copper prices. I used to, my mentor was the then chairman of the London Metal Exchange, Lord Bagri, and so I got to know more about copper than any sensible human should. And it's a pretty good proxy for global growth. If copper prices are going up, and you're not going to be trading copper, it's a pretty good sign for the broader economy. And it's one of the things that I'd look for. You see oil prices up here, 64, it's just there, $64. As long as that's below 80, we're not going to get a cost of living crisis in the Northern Hemisphere in winter. Because if we get that, then consumption goes down, and that's going to be bad for your pension in the near term. Now, you might as well, does it matter whether something's bad for our pension? It only causes you an ulcer in the short term, okay? Because it's a bit like your house prices. Think of it like your house price. If the price of your house drops 10%, you don't think, oh, I better sell it immediately. You just think, who cares? We're in it for the long term, okay? And that's the same way you should be looking at your pension portfolio, unless you're about to retire, in which case you shouldn't have so many equities. And I'll show you what the right amount is for different levels of stock ownership. But like I said, I want to start off with the macroeconomics or the geopolitics. One of the reasons I want to do that actually is this. I'll just share that. I've been invited by JP Morgan Private Bank to their to a breakfast on